Thanks for tuning in to our August 2023 YPN podcast. Before we get to the good stuff, here are some quick market stats. Our new listings are 982. Last year we had 1,309 listings. Our deals closed are 790. Last year, 951. Our pending deals, 937. Last year is 975. Median sales price right now is $350,000, whereas last year was $334,000. Inventory is currently at 1,178. Last year, 1,443. Our average days on the market are 21 days. Last year was 12. Take it away.
All right. Welcome to Wake Up YPN in the Morning. My name's Josh Price. I was your 2020 YPN chair. We are doing a show today on real estate investing. I'm really excited. We've got Nikki Bronstorp and Robbie Faithe as our guests. And my co-host today is Penni Rivera. And we'll go right into it. So basically, real estate investing, Franklin Delano Roosevelt said, real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. So why is that, right? So we've got a couple of great people here today. I'm going to go ahead and introduce Robbie. Robbie Faithe is a native Albuquerque resident. Robbie's a graduate of the University of New Mexico with a bachelor's degree in business marketing. He's the team owner of Faithe Real Estate Group, a top producing real estate team at Keller Williams in Albuquerque, top 1%, and has been buying and selling real estate for over 17 years. As of this moment, Robbie's real estate holdings include 338 rental units consisting of single family, small multifamily, several mobile home parks, and self-storage. Additionally, Robbie is a general partner in 3 commercial development deals comprising of retail homes, warehouse, and 59-unit mobile home park development. That's a lot of investment. That's pretty solid.
That's extensive. Yeah.
Good to have you here, sir.
I appreciate you having me. It's an honor to be here to chat with you and just excited to talk shop. I love real estate. It's what I live and breathe every day. So it's an honor. Appreciate it.
Awesome.
Yeah, well, thank you for coming. And I would like to introduce Nikki Bronstorp here. So Nikki Bronstorp is a real estate broker and top 10% of all Coldwell Banker brokers in New Mexico, top 300 producers in Albuquerque. She splits her focus between residential and commercial real estate. In 2023, she received Albuquerque Business First 40 Under 40. Nikki is the executive director of Red Lipstick Society, a nonprofit that teaches women financial independence and success. She prides herself in being a problem solver, a rock, and a person that people can come to when they need a solution, no matter the topic. She is a longtime resident of New Mexico, 25 years, and attended UNM, having a BA in political science and criminology and MBA. There is nowhere else she would rather build business, invest into the community, and raise her 3 children. Thank you so much for being here, Nikki.
Yes, thank you for having me.
All right. Do you guys want to add anything to your bios? Is there more that we should know about you in any way? I know. So Red Lipstick Society is a nonprofit that you have started recently.
Yes.
Correct?
We got our 501c3 in January.
Awesome.
So,
what's it all about?
So we are kind of still in the building and fundraising stages. We're building our board. I think there's 6 or 7 of us now. And we are all kind of women that come from kind of a background of survival, have all kind of come from rough backgrounds. And we really just want to give back to the women of New Mexico and really help women go from, a survival mode to success and thriving, and teach women things from, writing resumes, getting into college, real estate, investing, how to handle debt, getting rid of, bad their credit reports, everything that we weren't taught that we should have been taught, but none of us ever were. And really just create better lives for the women of New Mexico. And that's what we're doing.
That's incredible. Wow.
It's awesome. I love the idea of, we talk a lot of times about this like victim mentality. And the idea is you're not a victim, you're a survivor instead, right? You like switch the narrative. Thank you for doing that. That's good work.
Yeah,
Amazing.
that's awesome.
So leading into investing, right? And that's part of what we're all in, here for. Why is it so? Why? I mean,
Why real estate?
why real estate? Why is that? Why is that we talk all the time about how being realtors, how real estate and investing in real estate really is the best way to wealth in this country. Why is that?
Yeah, I mean, if you don't mind, I'll start it off. There's just so many things to talk about. I think one of the biggest factors is that it's highly leverageable. What kind of asset class can you get into where you're responsible for a small percentage of the cost of the asset, yet you benefit from the appreciation of the overall value of the asset over a period of time? It's incredible. It's scalable, it's leverageable, and it's tangible, it's versatile. You try to flip real estate. I love talking about my story. I don't know if you've heard it, Nikki, about how I tried to flip my first home. It didn't work out. This was in 2008. I couldn't sell it. So I ended up turning it into a rental property, and I was able to get the debt covered completely on it for a period of years, and I sold it finally and broke even. In the meantime, I was paying down principal. I was getting depreciation, which is a huge tax implication, especially for high income earners. You get cash flow, you get appreciation as the cherry on top.
Right.
You get debt pay down. I mean, there's so many sources of income and revenue in one real estate transaction. One transaction could change your life. And it's just the most exciting thing in the world to me. So, I mean, there's too many things to discuss, but for me, it's the biggest thing is leverage and scalability. Like you can literally go as big as you are able to create.
Right? Sky's the limit.
Yep.
Just have imagination and go.
Exactly.
Right? I love it.
Yeah.
I love it.
And I think that, Robbie's been doing this a really long time. I've only been doing this probably 4 years, and I've managed to, get quite a few properties now, knowing very little and getting very little formal background at the very beginning. And you can learn so much in such a small amount of time. You can go to people's classes, like I've been to a couple of Robbie's, and you can learn so much quickly for free. I mean, the ones that I went to of his were free, and anyone can do it. And you can get into it for little to no money. You can start to network with people. You can start to meet people that can teach you anything. If you can find deals to get in for little to no money, you can start making money right away. And it's just really about your motivation, what you're willing to put into it, and your hard work. And anyone can do it. And that's kind of why when you guys first asked me, and I was telling Penny this morning, when you guys first asked me to come on here, and I was like, with Robbie, there's no way. He knows so much more. He's been doing it for so much longer. I don't want to come on here. And I thought, you know what's funny? The reason I am willing to do it is because our viewpoints are so completely different. 20 years doing it with, like professional knowledge at this point, because he's been doing it for so long, versus 4 years of like just on a whim, jumping off and just doing it. That's why I wanted to do it, to show that like literally anyone can do it.
Good point. Yeah.
Well, I think that's why it's so important. Being the Young Professionals Network, we want to teach all of our new realtors that this is the way. Like you literally can you have to just have faith and go. And learn as you go. If you don't ever actually try, then you stay right where you are.
Yeah. And I'm glad that we have both of you with these two very different standpoints, so that we can show it's okay to start investing at this age or this age with this knowledge or that knowledge.
Yep.
Can I make a comment too? I think this is what you said is absolutely on point. But I think too many of us think that it's one path or the other. Right. You're either going to be a realtor or an investor. And my biggest harp on this, my biggest issue is that people they feel it's so binary, but really they cross-pollinate so well with each other. I think you should have both. And I think it makes sense to have the foundation, become a realtor, understand how to do the mechanics of actually putting a contract together and facilitating it start to finish. But at the same time, you're becoming an expert in a marketplace. Now you have the knowledge and foresight and ability to start investing as well. And there's so many different advantages of doing that. We have an unfair advantage as realtors, and we should be utilizing that.
I always tell people that as a realtor, we see a roadmap that not everybody else sees. And you can see where wealth comes from. You can see where to start.
Exactly right.
Because we have that weird little picture that the average public just doesn't quite understand.
Yeah, and we know these contracts in and out. We know how to make offers enticing, how to maybe waive this or that, or just really make that offer much more enticing than the average investor.
Exactly.
Well, and like Nikki said earlier, it's about some financing isn't always like cut and dry cookie cutter financing. The reason that you bring a real realtor into the picture is because they know people that can figure out how to solve the problem. If it isn't just
exactly
right there in front of you. So what would be the first things that you would look for if you were looking for a property, if you were looking to start investing? What would be the first things?
For me, I think it's important to establish what your objective is. You need to understand there's so many different ways to make money in real estate. Mm-hmm. It could be very daunting, and it can have kind of an analysis paralysis. I think you need to have a clear focus on what your objective is. Are you trying to replace your income if you're not a realtor? Are you trying to get out of that 9-to-5 job? Well, cash flow is going to be extremely important for you. So you need to be looking for cash flowing assets. And maybe that's not the case. Maybe you've got great income, you've got a career, you're going down a certain path. You're not necessarily looking to replace income, but you want to start building a nest egg or compounding what you already have, leave legacy for your family. Well, you should be probably going after some net worth plays where you can start building equity faster. So I think you need to start with that question and then back into the strategy to get you there. I like both. I think that's just kind of a nice way to do it, is look for cash flow and equity.
Yeah.
You have to do this by finding good deals, which is another reason why we have the unfair advantage of being realtors and getting the inventory first and knowing what's coming to market, utilizing the relationships. Nikki and I discussed deals behind the scenes. We've talked to each other, and we're networking with each other. We're talking about different opportunities with each other. And so, that's the huge benefit, and what we are uniquely positioned as realtors, what we really should be focusing on is how to do both. But to answer your question, I think you need to figure out what it is that you're after first.
Well, I love that that's the answer. I, as a property manager, quite often I have a new owner call me up. They don't want to manage the property themselves. They want it as a rental property. They just purchased it. They've got this idea that I'm going to make so much money off of this rental property, but then they don't take into account that they have a mortgage on the property as well. And they're like, well, how much rent can I get above and beyond the mortgage? And I'm like, well, that's we can't necessarily just, if I put that rental too high, nobody's going to rent it. Right. We talk about this all. Robbie and I have this conversation almost weekly, right? Yeah. I have to have it at a right price. Otherwise it's going to sit on the market, and then it's leaving money on the table. Right. The idea though, and a lot of those new owners, they have this idea that, I'm going to make all this money, but what they're not realizing is that they're making equity. They're having somebody else basically move into their property, pay that mortgage for them, and create that equity for them. And then they have that nest egg somewhere down the road. It doesn't necessarily make them money that second.
Right.
It might make a little bit, but it's not necessarily like you're going to be bringing in $2,000 a month, on top of your $2,000 mortgage. That's kind of.
It's important to be realistic, as you both know, and many investors. Sure. I want to talk about kind of a big subject right now, and that's the difference between commercial and residential property. So how does the choice between residential and commercial affect an investor's strategy and potential returns?
Mm-hmm. So I own both right now, and my commercial there's greater margins, but they are going to sit longer. So you have to prepare for them to have a longer span of time where they are going to sit, and you have to prepare for that.
Mm-hmm.
But the margins will be higher. But you have to have that risk tolerance for them to sit longer for sure. And people think that just because they can do residential, they can do commercial. And it's a different set of skills. And you have to make sure that you are prepared for that. I have a lot of referrals in my office for commercial because I do both. And I am prepared to walk people through that. And I am someone that teaches quite a bit. And I will do deals 50-50 with people to teach them. And I'm perfectly fine doing that with people because I like teaching people. But it is definitely a different skill set. The people are completely different. The knowledge is completely different.
Terminology.
Everything.
Right.
Yeah, the terminology. I mean, someone will say, they're asking me for an LOI and I don't understand why. And I'm like, okay, let's talk about this for a little bit.
So while we're in this, what's an LOI?
So it's a letter of intent,
right,
which is like a pre-offer. So before you turn in the purchase agreement, like you do on residential, they want basically a letter saying what your offer is going to be.
Right.
And
they'll pick that apart. You'll negotiate off
You're
of the LOI before you even get into it.
Yeah. And it's going to be redlined.
And it's not binding, right?
No, it's not binding. Generally. So occasionally a letter of intent, they will have it binding, but it'll say on there, this letter of intent is non-binding. And it'll be all redlined up going back and forth.
Yeah.
So it's completely different. And so, like I said, I have both. And I have to prepare financially that my commercial will sit. And a commercial lease, if it's a lease property, it's going to have a 3-year, 5-year, 10-year tenant in there. And so I want to be very careful about who I'm putting in there because I'm going to be stuck with them for a while.
Yeah.
A residential, I could have
a year.
It completely depends. It's going to be much shorter.
Month to month.
So I really have to plan much differently for that.
Mm-hmm. Yeah, good points. I would say that, financing is completely different, right? I mean, there's agency debt you can get in commercial. You can get 30-year long-term fixed rate debt. But I mean, you have to have, you're looking for larger commercial properties to qualify for something like that. Traditionally, 5, 7, 10-year balloons for commercial financing, which means that you got to get your exit on point. You got to make sure that you're understanding the cap rate going in and what you've got to plan for, stress test a number so you can plan for an exit that may not be, what you're anticipating, just depending on what the market's doing. I think there's definitely more, I agree with Nikki. I think there's definitely more money that can be made. It can be amplified, magnified more so in commercial real estate. If you just take, for example, a 30-unit apartment building, mm-hmm, you're going to bump rents, just do your normal annual rent increase of $20. If you do that on a single family home or even a 2, 3, 4 unit, it's not going to have a huge impact to the bottom line. But you do that over 30 units or more, even though, we're not talking about a huge amount of money, the way that you value commercial real estate is completely different. It's a factor of what your net operating income is. So by doing a $20 bump per month on 30 units, it's going to have a very substantial, it's going to have a substantial impact on what the valuation is going to be because you just increase net operating income by using the valuation of a cap rate. It's going to have much more of a spread that you're able to create versus the valuation of.
So you talked about cap rate, and that's very important as far as real estate investing goes. What's a cap rate? And why is that important?
Yeah, it's assuming if you were to pay all cash for a property, what the yield would be if there's no debt service on the property. Mm-hmm. And so, Nikki would probably speak to this a little bit more eloquently than I might put it. But, it's a way that you can determine the value. You need to understand what certain asset classes are trading at, what the cap rates are for certain asset classes. So it's a multiple of the net operating income for a certain asset class. So, we're seeing as rates go up right now, the yield for investors is going down, so the cap rates are going to have to go up so that they can have higher yield since they're paying more in interest. So cap rates, it's a moving number. And you need to have good knowledge of what certain submarkets or what cap rates are in certain submarkets. But I mean, essentially, it's a way that the commercial world evaluates the values of commercial assets.
Right. So when you're looking for new properties, you'd evaluate a cap rate in order to figure out when you're going to, or how long it's going to take you to get your return on your investment. Right.
Right.
Yeah, I mean, and it can be a little tricky right now, just because of the environment that we're in is just extremely unique.
Yeah,
you've got a lot of buyers out there still. We're seeing a lot of buyer activity. The market is strong. However, rates have gone up more than double from their lowest low. So there's certain people in the residential space, especially, that are priced out of the market. And so even though inventory is really low, you've got rents are high.
Rents are high.
Yeah. I mean, it's just a really unique time. And then, of course, in the commercial space, with rates going way up,
it's higher in commercial.
It's higher in commercial, right? And so, really, that should have an impact on pricing. Are you seeing prices come down yet in commercial as a result of the interest rates coming up? So, I mean, it's really interesting time. So there could be more opportunities now in the commercial space, would you say?
And real estate contracts are being used more as interest rates are going up in commercial, because people are willing to have that passive income for them to use as a personal, tool instead of the bank having it, and to be able to get that deal done.
Exactly.
Right. Whereas the bank has more stipulations, and that deal might not necessarily go through if we didn't use some creativity.
And I've had quite a few very large deals fall through this year because of commercial deals. The interest rate at the end was just too high, and from an investment standpoint, it just didn't make sense for anyone. So, very large deals have fallen through this year because of interest rates on commercial deals.
I think this is the biggest opportunity that's out there right now. Doesn't matter where you're at. The majority of the mortgages out there in the residential space, Nikki could talk maybe about the commercial world, but 65% is the latest statistic that I heard. 65% of the outstanding mortgages in the United States are at 4.5% or lower.
Right.
Wow.
So that is the opportunity. If you can figure out how to incorporate seller financing into your offer strategy, or even as a realtor right now, guiding your clients on what possible exit strategies could be on inventory that's sitting idle for a little bit, or for you as an investor. My objective right now, any opportunity that I see where I'm trying to buy it, or my team and I are trying to acquire it, we're going after seller financing, because the majority of the payments out there are very low. You've got these lower underlying mortgage payments. That's the opportunity to take over an existing mortgage payment where now you could cash flow it. You can even pay close to what it's worth, or you could pay a premium just to be able to take over an underlying mortgage. That is the commodity right now, is the low mortgage.
Well, and that's totally where you get the equity, and you get that little bump of pay every month that we were talking about.
Yes, exactly.
Yes. And that's where that owner that comes to me and goes, what am I looking for? How do I actually make some money and get my investment? That's exactly where you go.
I mean, this is where you can create real win-win scenarios where, you got a seller looking for a certain number. If I were to make a cash offer on a property, because let's be realistic, like, I'm an investor, I'm looking for return on investment.
Yeah.
I need to buy at a price that makes sense, just like any of your investors are, right?
Right.
And if I'm offering cash as a way to negotiate that price down, but we can't come to terms, we could increase the offer to what their number is, as long as it's within range of what the market is. I can pay a seller what they want for it if they've got that low mortgage payment, and in turn for giving them their price, they give me terms. And that's when we can start the conversation of, let's talk about how a way we can make this work for you and me. I can still generate a return for myself because I'm an investor. I can give you your price, In fact, you'll make more in the long run if you do the math on this over a longer time horizon.
Mm-hmm.
You start doing the math for them, and that's the huge opportunity. So that's what we're focused on right now is seller financing.
Right.
I'm glad that you brought that up.
And it seems like a lot more sellers are open to that now because there's a smaller mortgage pool with the interest rates not being at 3%. There's a lot less qualified buyers out there. So real estate contracts are looking a lot more enticing.
Right.
And it is a win-win situation for everyone involved if you can't secure financing, but you maybe make plenty and it doesn't always show up on tax returns or whatnot.
Well, I mean, in New Mexico right now, somebody making 100% of the median income, which is about $80,000, right?
Mhm.
Still only can afford a $2,000 a month mortgage.
Mhm.
What house right now on our market is going for $2,000 a month,
Right.
right? That's where these creative financing really comes in, you know, and you make things
100%.
happen for people that they wouldn't, if they're just going to the bank, it's not going to work. It's just not going to happen. That's very, very good points, guys. So let's talk about different types of investments, you know. You talked about, you know, your return kind of thing, but there's different kinds of things. You know, we have, you know, you have a situation where you're going to buy and hold a property. You have a situation where you're going to fix and flip a property, get rid of it. And then you might possibly go into rental properties. I know that that's something that you know, as a property manager, rentals are like, that's my everyday. I live in that area.
Sure.
But I think a lot of people don't necessarily understand the differences between all the, you know, those three different types of investment, or what they would entail. Can you speak a little bit on that?
Absolutely.
Yeah, you can go ahead.
You want me to tackle
Yeah.
that one? So yes, I think there are many exit strategies, and all of them that you mentioned, I think, are fantastic. And the beauty of real estate is, you know, it's there's so many different things that you can do. And aside from fix and flipping, holding a property, and the other one that you mentioned,
The rentals.
the
Yeah.
rentals, right? Buy and hold. I mean, there's other things that you can do. If you can secure a good deal, that's going to be attractive to not just yourself, but a whole pool of other investors. You can also wholesale real estate, which is a whole nother division that I have outside of the retail business. I call being a realtor the retail business. And if none of those work, the beauty and the cross-pollination we were talking about is always the last option is we can always potentially flip it to the retail side and have a potential listing. So my efforts pursuing the investments and the deal sourcing that we go through all the time, it creates multiple divisions of real estate. If there's a big enough margin in there and it's a really good location, you know, it's probably going to be a good buy and hold. Well, it will also be a good fix and flip. It could also serve as a assignment, as a wholesale deal where if the objective is to build your bankroll, then you could get in and out of it very quickly and assign it to an investor to make a quick assignment fee. And if none of that works, then you can always go and list it. So I think it's important to understand which opportunity is available for you as an investor. And it's a good point that you make where you need to be able to understand how to utilize each of them.
Mm-hmm. Now you talked about location. I love driving around town, and I feel like you can guess which neighborhood's going to be flipped next, right? You're like, I know when this neighborhood was built, everybody's aging out of this neighborhood. Within a year, there's going to be properties up for sale and they're going to be flipping all over the place. And I feel like you can drive around and you can totally like start guessing which neighborhood's coming next kind of thing. Or as a, maybe that's me seeing the roadmap that not everybody else sees. How much is location important to your investment? Do you only go for those prime properties that you know are in prime locations, or do you see a property and see potential for the location to be better in the future and then go for the invest? How does that work for you?
I think it depends on your risk tolerance. And that's kind of what I tell my clients too. You know, all of our risk tolerance is different, right? And so if you're okay with investing in the southeast part of town, right? Everyone knows what I'm talking about. You know that it cash flows pretty well. We all know that. But you have to be okay with the other things that come with investing in that part of town. And you definitely need a property manager, right? So if you're going
I'll always say yes.
You're always going to say yes. You definitely don't want to manage certain types of properties by yourself. Whereas other types of properties might be fine doing by yourself. And if you only have a certain number, if you have a small number, maybe less than 5, then you're fine maybe doing it by yourself, depending. Also, again, on you. But in certain parts of town, you don't want to do it by yourself. So I don't think location matters. I think it comes down to numbers. So I think that you need a very, very good spreadsheet. And I think it comes down to knowing your numbers really well. I'm not sure personally that location matters. I think it comes down to the numbers for me personally. I don't know about you.
I think it's a very interesting perspective. You hear all the time, like the biggest driver of real estate is location, right?
Right.
And to some degree, I agree. If I'm going to be holding something long term, I mean, historically speaking, the really strong locations have the most appreciation. You know, the rental rates can get the most premium that can help cash flow. And you'll have a broader potential pool of renters, which makes it more marketable. So as a buy and hold investor, I would say the properties that I'm holding on to personally, there are certain locations and certain parameters that I have for that. However, I agree with Nikki because one person's trash is another person's treasure.
Right.
And this is the beauty of wholesaling real estate, is if you have the value of locking up a good deal for somebody. Nikki has clients and I have clients where their niche is in the international district or maybe a location that is not highly sought after. You can still monetize that opportunity. So I still believe that I agree with Nikki. I think that, you know, having the ability to be versatile within real estate and have the multiple exit strategies that we're talking about is going to allow you to monetize every opportunity better. So I agree in that regard. For me as a buy and hold investor, I look to be in strong locations that command the highest rental rates, that could be in the potential path of progress. We want to have a little foresight of what's coming.
Right.
That's why understanding, being involved in what's going on in the community is really critical. I mean, I hear of investors all the time, getting some information on you've got a big corporation who's coming out and buying in a certain area and they're going to be there for a certain amount of time and have X amount of employees that they're hiring. Who's going to need access to this location. And you get wind of that before it comes. You could go in while prices are low, pick stuff up, and it's just organically going to grow. So I think location's critical, but I think there's still opportunity to make money in any location.
Right. So what I'm hearing is it's more about the margin that you get based off of the location. I tell people every day that I can rent a property anywhere. Like somebody wants to live there.
Right.
Like people need places to live. Like there's always going to be that one person, And I love that you said, somebody's trash is another person's treasure. That was the first thing I learned years ago doing this, was not to judge something based off of my own lens. Right. There was a property I walked into and I'm like, oh my God, I'm never going to rent this. And like 2 days later, I have this lady that moved down and she's like, this is the greatest house I've ever seen. And she's like in love with it. Now, all I'm thinking is, like, what are you thinking? But really, it isn't me. It has nothing to do with me. You just have to remove yourself from the situation and actually look at numbers. I think that's the point here, right?
That happened with me as well. I just recently purchased a property for a very small price, and someone in my office said, oh, I saw that big fish you just sold, not realizing that it was for me personally. Kind of poked a little fun at it. And I was like, yes, I did. I sold that and I sold it to me. And I've got my first investment property under my belt. And I couldn't be happier. I know he was someone's trash is someone's treasure.
Yeah, you have to be really careful about what you say, you know?
Yeah.
Because you might not know whose feelings you're hurting, you know?
Yeah. And I don't think he
really
even
careful.
realized that it maybe stuck with me the way it did. But it kind of fueled a little bit of a fire in me.
Yeah, good.
Yeah.
Get that fire going.
Yeah. I don't care.
There's
if
always
it's
going to
a
be these naysayers, you
small
know.
little property or $1 million property. I'll get there.
So you got your first investment property.
Well, it's also my first property.
Okay, cool. Well,
It
congratulations.
will eventually be an investment property
Yeah.
after you move out of it.
In 1 year.
Yeah.
Yeah, I love that strategy too. It's great.
You know, I used to host a multifamily meetup, and it's disbanded now, but it was a really great experience. But I used to tell all of the brokers in there and the investors in there that when I would do the walkthroughs through multifamilies and now too, I used to go through each apartment, right? And generally the people would still be in there. And you know, as a property manager, that I would always go through each apartment very professionally, but with a certain kindness, but not get involved anyway. But you make sure that you carry yourself in a way that's kind, but you know, they are scared of you because your presence brings a very scary change to their lives because they don't know why you're there or that they're going to get kicked out or what's about to happen to them. So you make sure that you don't, you know, come through the house and you're moving all their stuff and you're being rude and brash and, you know, their babies are in their diapers and stuff, and just carry yourself with respect and, you know, grace and just a niceness, but don't overly involve yourself. And because they're really afraid of you and you have a duty to people to just be kind, you know? And I always tell people in those classes that to, you know, make sure that you do that. It's important.
I'm glad you said that. It's definitely a situation where I can speak to. If I put a notice on somebody's door, they don't know why I'm putting the notice on there. It definitely scares them to death.
Yeah.
You know, one of the first things I like to tell them is that I'm not here to judge you. I'm not here to anything. I'm here to check on the property and protect the investment of the owner of the property. That's 100% what my job is. Everything else is what it is. You know, if there's, I just tell them right up front, if there's something you wanted to show me, please let me know. If there's something broken, this is the amnesty period. Just tell me and we'll get it fixed. You know, I'm here now. Let's fix things. But I think that that's the key, especially when you're dealing with tenants and you're, you know, is kindness goes so far. You know, a lot of times everybody sees numbers and sees, especially with investments and stuff like that, and you don't actually see that there's people behind them. So that's a very good point. Thank you for adding that. We talked a little bit about, so why include a property manager? You said that, you know, you wouldn't want to manage more than a certain amount of properties without one. Like I said, as a property manager, I definitely would advocate to have one. But why are they so important?
Well, figure out how much my time is worth, right? I mean, my time is worth a certain amount per hour. And there are things that I need to be doing with my time. I have a job, right? I have children. I have a life. I need to delegate my other responsibilities to someone else. I don't need to be managing my properties all the time. There's other things I need to be doing with my time. So just like I hire someone to do other things with, you know, all the other components of my life, that should be going to a professional, right? That's not what I do. Someone should be doing that professionally, that can do it better than me. And so it is a good use of money, that someone can be doing that much better than I could be doing it. And if it's being done improperly, I mean, that's just a huge risk to your investments, you can be losing a lot of money and really damaging, your property, people's lives. It's a huge risk to not having that being done well.
I like to tell people that property management isn't so much about being a landlord or being in charge of tenants, because really what my job and what I see my job is being the person that protects those investments. So my job 100% isn't necessarily about who's in what property, that kind of thing. It's that property and what the integrity of that property is. Is it making that investment? Is it making a return for that investor? And is it being protected in the way that it should be? I feel like that as a property manager is 100% what I do. And I think that probably public perception isn't quite that.
Yeah.
No.
I like that description though.
Yeah. People think they're saving money by doing it all themselves, but they end up costing themselves money.
Well, and time. That's what you talked about.
Time is money.
Time.
Well,
time is money, right?
I will say though, I recommend, when I started out, I did everything on my own.
Yeah.
I wore every hat. And yes, it was very time consuming and I found myself doing things that I didn't want to do, but I learned the ropes.
Mm-hmm.
And I think for the people that come to me asking, should they start with a property manager? I think you should always budget for the management company in your underwriting, because you'll want to offload that at some point. But you also, I think it's important and beneficial and educational to have the knowledge and understanding on how to manage it properly, so that when you hire a property manager, you have a better idea of how your process is and you can ask better questions when interviewing property management companies. You're not held hostage by a property management company in case you have to take a property back. So I think it's important to have a good fundamental knowledge. What Nikki says, I agree with. I think that it's the opportunity cost of doing something that is not in your area of expertise. Number one, you could have some liability and exposure for not doing something properly. But the biggest thing is, if your objective is to grow a business, then you're doing something that is probably not the best use of your time. Even though it's a very valuable use of time to have a property manager, I think that I'd rather spend time growing my portfolio so I could provide more properties to manage for the management company. You start getting more units, you start getting some more properties under your belt, then you might be able to negotiate better rates with management companies. So overall, I think, it depends on what your objective is, but I think it's good to do both. I think you should manage a little bit just to have an understanding of it. But I absolutely think if the objective is to go big and grow, then you need to outsource it.
Well, and I think that's a really smart comment, is that the owners that come to me with brand new investments that have never managed a property or never really owned a property, but now have this light bulb went off, like, oh, I'm gonna make so much money. And then they don't actually know what questions to ask me. They don't know when to follow up to make sure that things are happening the way they should. All of a sudden, when something happens, it's like the end of the world because they didn't know what to plan for. But then it's hard. Everybody's knowledge base is different. So it's hard for me to necessarily know how to lead them along as to what to plan for, like things where, like, as an investor who's owned lots of properties, that somewhere, someday at one of your properties, the water heater is going out. It's happening. It's not I hope this never happens. It's going to happen.
Yeah, sure.
And you plan for it,
right.
And you have it on your radar that somewhere along the line, I'm going to have to fix something, or something is going to happen that is going to need to be. But you get those brand new people that don't have that knowledge base, and all of a sudden it's like, oh my God, what did you do to my water heater? And I'm like, well, it was 20 years old.
Yeah.
Like, didn't do anything to it. It worked. It lived its life. It's gone on to, water heater heaven. Let's get a new one.
Yeah. They don't anticipate it.
Yeah,
Right.
there's definitely a specific, I guess I kind of see it like, maybe here's an example, like a for sale by owner trying to sell their house without a realtor. There's so much money left on the table. There's legalities held open. There's just so much to know that we spend years and years training on. It's similar with property management. I'm on the same page as you all. You want to understand what's going on. but maybe pass that along to somebody who knows more than you. Yeah. Well, I mean, I would like to kind of talk about taxes and how taxes roll into all this investment. I know that was a segue, but are there tax benefits to specific real estate investments? And tell us about them.
Definitely. After this, I'm actually going to go meet someone to do a cost segregation study on one of my properties. I'm always learning new things. There's always so much to learn, and you always learn new stuff, you know, and it's about like hanging out with other investors and other realtors and other people in kind of all of the different groups that we're always learning about new things. I'm always trying to figure out new ways to figure out, different ways to save on taxes, different ways to structure things to be able to, save money and things like that. But obviously, in deductions, in cost segregation, accelerations, in write-offs, in all different things. The cost segregation studies accelerated is a new thing that I recently figured out and that I'm doing on all my properties now. And basically, that's a way to save on your taxes and to basically anything that you put into your properties, you can accelerate the everything that you've put into your properties much quicker. So like 27 to I think it's 39 years on commercial, into about 2 years of having the property. And you get all of the cost savings much quicker. What else?
No, I mean, you nailed it. A cost segregation, I think, is the foremost topic for real estate tax savings tips. I mean, this is absolutely incredible what cost segregation can do. And as Nikki said, it's a way to accelerate the depreciation and take essentially a paper loss, front load it into a smaller period of time so that you have losses that offset the income that you're creating, thereby allowing you to keep more of your taxable income. And Nikki and I aren't CPAs, so check with your accountants about all of this. The knowledge that I have about this is it's important to implement cost segregation studies. You can actually do them on single family homes. It used to not be economical to, because the cost of the study was more than the benefit. And it used to be, I know I've talked to a lot of specialists that say $1 million or more in purchase price, you're going to get more benefit out of it. But there's companies out there that if you've got single family homes as assets and you are a high income earner, you could still benefit from doing the cost segregation study. The company that I use, I think, charges about $19.95 a property, and the benefit far outweighs the cost. And so essentially what you're doing is just taking losses in a shorter period of time, thereby allowing you to keep more of your taxable income. It just reduces your tax liability. So cost segregation is huge. There's people that I know that I work with, investors, that are buying real estate solely for depreciation. They don't care if it appreciates. They'd like it to cash flow. It's not a prerequisite, but they're trying to retain more of their income. And at the same time, they're preserving wealth by transferring, money and cash into a property that tends to historically appreciate 3 to 5% a year. So wealth preservation is another factor, but depreciation is huge. The other thing that we could talk about, which I'm not an expert on, I won't ever claim to be, but as a real estate professional, if you spend, I believe it's 750 hours or more in the business on an annual basis, then you'll qualify as a real estate professional status. You don't have to be licensed for this, is my understanding. You could just be working in real estate, and there's some very positive tax implications by having that real estate professional status that could actually have a huge benefit on what your tax liability is. So that's something I think that the listeners should look into, talk to their CPAs about. definitely cost segregation, and definitely the real estate professional status if you plan on being, a full-time realtor or full-time real estate investor.
Wow. Okay. You are so knowledgeable, both of you, and that's some really great advice. Do you have any other nuggets of advice for our investors?
Well, now, do you guys, 1031 exchanges, right? At the national level, they always hint back and forth that the legislators are going to try and get rid of that at some point. And NAR is, gung-ho fighting to make sure that we keep that as accessible as possible. Is that something that you guys, keep, as a, tool that you use? Do you like, how often do you?
Well, frankly, I have not done a 1031 because I don't ever sell. My goal is to hold forever, but at some point that might change, and I might have an opportunity where I need to access capital from a certain property and roll it into something else. So your tax, savings is kicking the can down the road. It's deferring the potential capital gains that you might have. And I see a lot of investors utilize this. It is absolutely a really great strategy. There's definitely some nuance to it. There's a lot of guidelines that I think it can be a beneficial strategy. I also think that it can be potentially be a detriment to you as an investor because you're under the timeline. You have a certain timeline to identify a property. And I see a lot of people just rush into identifying one of the properties within the time period, right? And then they got to close on it. So you could just buy something for sake of buying something. And, there's a reverse 1031 that you can do that could help mitigate that. I don't know a ton about it. I hear about it a lot, but I think it's a great topic to bring up and certainly a good tool.
I've done quite a few for my clients, but I haven't done one for myself. And you have the 45 days to find a property, and then you have 180 days to close on the property, and it has to be like kind. So, and I have qualified intermediaries that I use at the escrow companies locally. And, I belong to New Mexico Exchangers, which is a local group that I love. And there's a few in there that I use. And if you don't belong to that group, go check it out. Because there's a lot of people in there that use real estate contracts. That's like what the whole group is about, really. And that group is basically a group about trading and investing. But there's some funny things that happen in that group. There's a lot of, do you ever go there?
I've been, and it's blown my mind. Like, what, you can trade real estate?
Yeah, it's funny. So, yeah, I've seen people trade boats and horses for a house or all kinds of funny things. So, and, there's guys that'll put the deals together and they trade paper, which I don't know much about trading paper. I want to learn. They've a bunch of guys that have been doing it forever will literally teach you anything you want to know. They're so great. Right. And they meet, and I go about once a month. They meet Thursday mornings at 8:30 at the Tennyson Place. And everything in there is trades. Mm-hmm. So real estate contracts and just straight trades. And just so much knowledge in that room about everything. And if you want to learn about real estate contracts, so Terry White is in that group who owns SunWest Mortgage, SunWest Escrow. And he is so great to learn from real estate contracts on. There's a bunch of classes at SunWest too. And he teaches at SunWest a lot. And he's got a book. If you walk into SunWest Escrow, he's got a stack of books in there and they're free. You just walk in there and it's just a book on real estate contracts and you just walk in and grab a book and everything you need to know about real estate contracts. So good. Just consolidated into a really good short little book.
Very cool. I'll go get it today.
Oh, yeah.
I want one.
Great
book.
I'll
grab you one.
I have it handy on my desk. One for everybody. But yeah, I think if you are not utilizing real estate contracts, that's the best way to buy investment properties. Most of my stuff is on real estate contracts.
Awesome.
And what's great about it is that if you can get something on a real estate contract, and even if it's short term, even if it's 5 years, 3 years, and then when you have to go to what am I trying to say? Get a new loan on it.
Yeah, your balloon.
And your balloon's due. It's so much easier to go to a bank and say, okay, here's my situation. Right. And then you can actually show them that, I've owned this for 3 years. I need a loan on it versus trying to go get a new loan. Right. It's just so much harder. So it sounds scary to sign something for a 3-year term, but it's not really, because you can easily go get a loan at that period.
I'm totally buying my house right now.
Are you really?
That same strategy, real estate contract, then loan.
Yeah.
And basically it just made sense. That was the only way to really do it.
Yeah.
Absolutely. Yeah. It's the biggest opportunity. I agree.
That's awesome.
Yeah. And just refinance.
So we're coming kind of to the end of our time here. And, you guys are awesome. This has been a great conversation. I'd like to know, kind of if you were to see a brand new realtor and you were going to give them some advice as to where to go or where not to go, since you've got, experience and can tell them that too, what would you say to them?
Is it okay if I go?
Yeah. Go.
Thanks. I think about this a lot and my answer changes. I think if I were just to sit down and really conceptually understand what it is that you're asking, ultimately, I think we're all trying to get to a certain destination. Mm-hmm. Hopefully, we have goals in mind, right? I think it's important, critical, you find somebody who is already where you want to be and learn through osmosis. Do whatever you can to work with that individual or that group, because there's nothing that's going to be. You can read about real estate contracts all day long, right? But until you get the experience of doing the negotiating with the seller and talking about all the different key points that you need to understand to formulate an offer and come to an agreement, like there's just nothing that's ever going to trump the experience that somebody has. So I think it's simple enough to find a mentor, a coach, somebody who is where you want to be, do whatever you can to be around them, get in bigger rooms. This has been a game changer for me. Getting around, they say you're like the average of 5 people. I totally believe that. I think it's cliche, but so truthful. I pay now to be in rooms where you have to pony up a lot of money to get in rooms with people. You're already vetting out the tire kickers. You've already vetted out the people who shouldn't be in that room. And that relationship is so valuable. It could take you to the moon, So be around the people. I think the human resources, the human capital is probably more valuable than understanding exactly every little minute detail about how to do this.
That's awesome.
Yeah, I agree. And consistently set goals for yourself and don't be afraid to just take risks. I'm a huge risk taker. My risk tolerance is really high, much higher than most people's. I will just jump off a cliff and just worry about the consequences later. I'm kind of, just like that. Most people are a little bit more cautious than I am, but don't be afraid to take some risks. What's the worst that can happen? I mean, and you learn from your mistakes so much better than anything else. I mean, making mistakes is really how you learn.
Right. You remember your mistakes more than you remember your successes, right?
Oh, for sure. Like, ouch, that hurt. I'm not going to do that again.
Wow.
Yeah.
Yeah, that's good.
So, I mean, I'm okay with making some mistakes. It's fine. If people say, oh, well, you look stupid doing that. But at least I tried. Everyone else is sitting by the sidelines, too afraid to try.
And they saw you.
Yeah.
Right?
Who cares? People are watching.
Yeah.
And letting me look stupid. I don't care.
And you're that much closer to looking smart.
Yeah. Who cares?
You're making moves and you're getting the feedback, the data.
Yeah.
To change your strategy. I think that's brilliant.
Yeah.
I think failing is
It's
critical.
Okay. YOLO.
Yeah,
you're not getting out of this alive, right? So just go for it.
Yeah.
My grandma always used to tell me that if I was the smartest one in the room, that I was in the wrong room.
For sure.
And I live by that all the time. I always think of that. I think of exactly that is I need to go meet those people that are going to teach me something and just make sure that I'm around them as much as possible.
Yeah.
Yeah.
And that's why we're here. Really.
Yeah.
That's why I'm here right now.
No, I love that.
Yeah.
Yeah. So just try.
Awesome. Well, thank you guys very much for joining us. I think this has probably been a fantastic episode. And
Absolutely.
thanks a lot.
It's been our pleasure. My pleasure.
Yeah.
Yours too.
No, yeah.
I hope.
Go ahead, speak for me too. I agree.
Yeah, we appreciate you very, very much. And hope to have you on another
Yeah.
episode one day.
Yeah, for sure.
If anybody has any more questions, I'll speak for Nikki too,
Yes, go for
apparently. Feel free to reach out. I'm on Instagram. It's the best way to reach me. Realtor at Realtor Robbie Faithe is my handle. And
What is mine? At Nicole.
Well, you might use a different platform more often. That might be better.
I'm sorry, it's at Robbie Faithe Realtor. Sorry
See,
about
he doesn't know his either.
that.
I follow you both, but yeah, I couldn't tell you what your handles
I
are.
will be
Nicole Marie
following
Real
you.
Estate. That's what it is.
There
With
you
an
go.
H, Nicole.
Awesome,
Yeah,
guys.
love to help and appreciate the opportunity to talk to you.
Yes.
It's been fun. Thank you so much.
Yeah, thank you guys.